Hi, I'm Pankaj Gupta. I have been doing stock market investments for the last 10 years. I invest own as well as clients' money. I basically invest clients' money in equity stock, create a portfolio, and manage their portfolio through the portfolio life cycle. This video is about should we invest in stock market considering all the risk stock market investment carries. Uh, Before we start, uh, let's understand what are the issues in stock market or what are the major concerns in stock market. First and foremost is the high risk. Stock market is a high risk business or high risk investment. Chances of your investment value going down will always be there. There have been cases of wealth erosion where or short-term wealth erosion is part and parcel of stock market. We recently know this Adani case where a huge wealth erosion has taken place, though it has recovered to some extent. And in past also there have been cases where companies have gone bankrupt, companies have closed down, and the stock prices have come down to zero. People who have invested in them in those stocks have lost their entire investment amount. Third issue which is there is stock price manipulation. Some people feel stock prices are manipulated by certain people sitting at top of the company or maybe some fund house or some group of people, I don't know, and they don't know what's happening. Stock prices move so erratically, they don't know when to buy, when to sell. And this is particularly true for small cap and mid caps. Large caps are a little better off in terms of price fluctuation. Market crash. Market crash is also part of stock market. We recently had this coronavirus crash in 2020 where markets have fallen by I think 30-40%. In past, in 2008, we had Lehman Brothers collapse, where again world over markets have fallen by maybe around 50%. And in India, I think 2011 and 2015 were 2 years. It was not a crash, but some downtrend was there in the markets. So market crash or maybe downtrend will always be there in market. And to add to more, the silver lining is the latest news of global recession. In case we are going into global recession, economy is going to shrink, how stock market will grow and we will get better returns. So these issues are there and these nobody can deny these issues. And these will always, maybe one issue may come, one issue may add. Certain issues or certain risk parameters will always be there in stock market investment. Now what can be done? How can we minimize these risks? Certain points. First and foremost is research and analysis. All stock market investment decision has to be purely based on sound research and analysis. Now what to research, what to analyze, what news, what information, what parameter, that depends upon individual. But there has to be stock market investment has to be based upon sound research and analysis. Then we have all investment decisions again has to be backed by factual data. We shouldn't be buying or selling a stock just because we feel to do it. Any investment decision based upon factual data will always be better off than intuitive decision. Or if it is not better off, it will be it will save you from unwarranted risks. Investment theme is another point. People follow different investment themes. Somebody wants to invest in automobile, somebody wants to invest in banking, somebody wants to invest in IT. They may have their own reasons. So that plays again an important role in minimizing those risks. Investment strategy. What strategy you are following? What do you want to buy? You want to buy high P, you want to buy low P, you want to buy costly, you want to buy cheap, you want to buy underperformer, you want to buy outperformer, you want to buy industry leader, you want to buy what you call dark horse. I don't know. So many strategies are there for stock market investment. So people choose their own strategy. So with all these parameters, a strong portfolio can be constructed, and sector weights, stock weights, or exposure to individual sector or stocks can be decided, which will help us minimizing those risks which are associated with stock market. And last of all, we always have the option of hedging a portfolio for any potential losses. So again, hedging also so many options. There is a cost, but that also can be taken care of by doing certain adjustments from time to time. So that's all. So these issues, stock market will always remain a high risk, high reward business. We need to evaluate risk and reward combination or ratio and then take our sound investment decision. We need to have a risk management plan, which we just discussed. We may add certain more points. So with this, all these issues, all these risks can be reduced, if not eliminated, can be reduced to a large extent. Now in long run, stock market is not going to go anywhere. It's a reflection of country's economy. You need to keep a long-term horizon. Economy is going to grow. We may have some pushbacks or some stagnation for a short span. Ultimately, it will grow. And if economy is growing, stock market is not going to lag behind. It will beat in the long run. Stock market will beat returns of any other form of investment, and it has proven in the last 20 years. Stock market index returns are more than 15% CAGR, and individual stocks we are sitting at more than 20-25%. People who have invested in last 3 years post this coronavirus crash, I think they should be sitting at a CAGR of more than 25%. So that's all for this video. Stock market will always remain a high risk, high reward business. You need to evaluate risk and reward and then take an investment call. I would say there is no hurry. Stock market was there, is there, will be there. There will always be investment opportunities available at any point of time. And I would say, you like it or not, you can't avoid it. Government is actually creating a scenario where everybody will have to invest in stock market, because other forms of investment we get not more than 6 to 8%, which I would say, considering the inflation and general GDP growth, is peanuts. So if you're looking for a higher return in excess of 10%, 15%, 20%, we will have to take some risk, and stock market is the only option we have. But my advice would be, don't do it yourself unless you have enough experience and knowledge. Take professional advice, take help of a portfolio manager or mutual funds, whatever you feel. So that's all for this video. If you have certain issues or questions, please feel free to contact me. Thank you. Thanks for watching.